Well, good morning, everyone. It's been about a month since I've been on Core Finance, and as we all know, quite a lot has happened. In this morning's slot, I'm going to try and look at some shares that I feel have got potential if and when a bottom to the stock market eventually does arrive. Just remember, when it's time to buy, we won't want to, and the news will be dire, but certainly there's no sign of a market bottom this morning. And in the first slide, should I say, I've got the UK market timing chart, and it doesn't make great reading. We had a great run from March the 24th, 2020, and then we went into that consolidation pattern since about last October, and there were some sell signals within that consolidation, but they didn't cause the stop losses on the shares that I was holding a great deal of problems. So, but in the last sell signal, as the overall market fell out of that triangle that I think most of you can see, I was stopped out of over 70% of my holdings. So this morning I'm sitting in cash. I have 30% of my holdings left, 70% in cash, and I was stopped out over the last 4 or 5 weeks in all of those. So that's the US market, folks. The US market, in fact, gave a sell signal way back in November. There was a couple of small rallies, but they weren't enough to actually trigger the VectorVest market timing system to actually give a buy signal. So I put together a watch list on a part of VectorVest known as the Unisearch, where we can look for stocks with any combination of parameters that suit our objectives. So on this particular search, I'm looking for shares, not investment trusts. And because I want to try and find value in this market, I want to find a share where the price is less than the VectorVest valuation. Now, relative value on VectorVest measures the share price potential in relation to a government bond, and I want the shares selected to outperform a corporate bond significantly. And I want the shares to be in the throes of a strong long-term trend, and the comfort index measures the long-term trend. And greater than 1 means it's rising, and at 1.2, that's a reasonably strong long-term trend. The share may have pulled back in the short term, but there's a long-term trend that it's back. And I sort the shares that come out of this by the safest shares on the London stock market. So I bring the safest stocks to the top of the list, and that's done by changing the default sort to relative safety, which measures the safety and the predictability of the earnings growth. And out of that Unisearch came the following stocks that I'm particularly interested in if and when a bottom should come. The first one is Cape Tech. I had a really great run in Cape Tech. I got stopped out of it as it pulled back there. You can see the red signal on VectorVest. And it's now come back to this long-term support level. The general market's got a lot of work to do to turn, and Cape needs to print a buy signal for us before getting back in again. But certainly Cape is on my watch list. So, and it's always good to have a watch list prepared, folks, so that when the market does turn, and it will turn when the news is still dire, I assure you, at least that's what's always done in the past, that you're prepared. So I like Cape. 3i Group hasn't pulled back by that bigger percentage. The green line is the VectorVest valuation, significantly undervalued. The blue line is forecast earnings per share, rising strongly. And you can see over the last few days, it's gone up a little bit on huge volume. That's a really good sign. So 3i Group, I'm interested in. This is a building stock. They're active in London only, Morgan Sindall. Again, common theme, significantly undervalued, earnings per share growing strongly, and we can see that these levels are very important in the share, and just traded a nice double bottom, and the shares moved up strongly in a general market that's been very weak indeed. That's Howden. Exceptionally good results the other day. As you can see, pulled back in this sell-off to the February 2020 highs. Again undervalued, again growing earnings strongly, and has pushed up over the last couple of weeks. This is a weekly chart on big volume. So that's certainly in my watch list. It's on a hold at the moment on VectorVest. So two things have to happen. One, general market needs to turn, print a buy signal, and Howden needs to print us a nice buy rating. That was a first buy rating way back here, and that kept us in this market the whole way to there. So if you just do what VectorVest tells you to do without a great deal of thought, you can make an awful lot of money in this market. This is Airtel Africa. Airtel Africa, undervalued. Again, earnings per share rising strongly. There was a share placement that was done slightly under the market, which caused this gap back right to the old top, and it's now building up again, and I think that stock's got a great future ahead of it. It's just, I think, just about to be admitted into the FTSE 100. And MARL, I've had my eye on for a long time. Again, it's pulled back to this support level. It's on a sell recommendation at the moment, so there's nothing to do. We need to wait again for the market. We need to wait for this to print a buy signal, but you can see as it printed buy signals after the 2020 sell-off here, we got this very long run. This is a company that's going places, pretty recession-proof. It offers recurring income services in a business area that it doesn't matter how bad the economy gets, you have to have them. In other words, compliance with lifts, with fire, all sorts of things that just don't go away if your company's not doing well. They still have to be rubber stamped every month. So run by an exceptionally capable young fellow. And then Italian mining. Now commodities have had a huge run. And when I was on Core Finance a month ago, I talked about both Serica in the oil business, and I talked about Anglo American in mining, and both those shares have done well. I have to caution about getting into oil stocks at this stage of the cycle. I think that swing trades in oil stocks are great, but I think that that market, the oil market, looks as if it's at an extreme. And I don't believe it should be used for position trades, but certainly for swing trades over the next few weeks, few months, it looks appropriate. This is Italian mining, and the copper, a miner based in Spain, and significantly undervalued. Earnings have risen, maybe not as smoothly as I would like. It's certainly got a base here at this £4 level, and looks to me with the move in commodities, that's only got one way to go but up. So there are many other candidates for a watch list, but those are the ones that I should be watching in the weeks ahead. But I have to reiterate, folks, that the general market is falling. The FTSE 100 is down strongly this morning, and that if you're a long-only player in stocks, then I think that you should stand aside for the moment. Just doing nothing, I know, is much more difficult than it would seem, but nevertheless, cash is also a position. Thanks very much indeed.